Glad to know you're still with us. Let's tell you again that Oando Plc is set to raise 500 billion naira in fresh equity capital following shareholder approval. This move aims to reinvigorate operations as the oil company grapples with liabilities that surged to 7.1 trillion naira by June, pushing shareholder funds into negative territory. The capital raise, which could involve up to 10 billion ordinary shares at 50 naira each, seeks to address a persistent negative equity position since December 2020. Oando's liabilities have climbed due to increased bank borrowings and other lending obligations. Shareholders also approved converting up to $300 million of its reserve-based lending debt into equity, alongside launching a $1.5 billion multi-instrument issuance program. To unpack this, I'm joined by Femi Oladehin, partner, Argentil Capital Partners. Thank you so much for joining me today, Mr. Oladehin.
Thank you so much. Always a pleasure on your show.
Absolutely. Now, Oando is dealing with a 7.1 trillion liability, which has resulted in negative shareholder funds. How disturbing is this?
Maybe disturbing wouldn't be the exact word. I think that for shareholders, there should be some clarity as to where the company is coming from. You did mention the fact that it slipped into negative equity in the year 2020, driven by some of the regulatory-induced changes that it had to deal with at that time. And the implication of that was certain settlements were done that required the company to borrow to settle those shareholder disputes or those shareholder issues. And the implication of that was that the company actually lost some value in its equity, and that has not been replaced. And in the middle of that, the company has continued to acquire and expand its asset base. So whilst it's, when you look at the company from a balance sheet perspective, it feels like, oh, there's so much liability, and there's a negative shareholders funds that's backing those liabilities. The reality is that this is also a company that's very asset heavy, and then requires equity to be able to unlock the value that is latent in those assets. And I think that's where the bigger focus is. If you had listened in at the AGM, shareholders were able to understand clearly what the company's strategy is towards unwinding these positions. And the reality is that for a company that hasn't raised any equity probably in the last 10 years, but has done as much of the acquisition that it's done, $1.8 billion to acquire ConocoPhillips, another $780 million to acquire NAOC. And in addition to doing that, quite a bit of investments in its infrastructure. So it's obvious that this equity raise is something that should have happened prior to now. And in the absence of the shareholder disputes that happened in the late 2020s, we wouldn't even be in this situation with Oando.
So who do we blame for that?
Well, the obvious, blame would actually go to the shareholders. And when I say the shareholders, the exited shareholders who tried to destroy the company because they wanted to take control of management at that time. And the company shareholders, that's the remaining shareholders, made the decision to take their company away from people who did not share in their own long-term plans for the corporate. So I would say that, look, given where the company is right now, the trajectory is positive. The value that is in its assets, 1 billion barrels of oil reserves, and trillions of millions scoff of gas reserves that are in the ground that can be extracted and sold for value. It's a company that can turn its situation around very quickly. If its shareholders, as they've backed management at the AGM, you should see that turn into a stronger recovery story in the short term.
Well, I understand where you're coming from, trying to blame that on the shareholders, but we also know Oando has been reputed for certain things, whether it's not necessarily following corporate governance and not churning out its results as at when due. So when you put all of this blame on the shareholders, I'm wondering if Oando doesn't have anything to take, any share to take from that blame at all. But away from that, let's look at Oando's financial performance, which has seen fluctuations. I mean, some observers are raising questions about how a company might declare a significant profit in one period, whether you want to talk about the 220 billion naira profit after tax, which was declared by end of the year 2024, and then post a gross loss in a subsequent period, especially with stable oil prices. Do you think these trends, coupled with the need for an EGM to address capital, diminution for 2024, indicate broader inconsistencies in its financial health or even reporting?
Well, I wouldn't say reporting. Financial health, definitely. Again, like I mentioned at the beginning of the show, right? This is a company that has done some significant acquisitions without going back to the shareholders to raise equity. And those acquisitions are supposed to help them unlock value in their assets. Now, ordinarily, as you would know, in most transactions, if you're doing a major acquisition, what usually would happen is a combination of equity and debt. What Oando has done in recent history is to do most of those acquisitions with debt, which is not unusual, because what happens is that debt is easier to raise in the market. You go into the market, you raise debt, and the expectation is that you refinance that debt by going into the equity markets to raise equity. So the Oando's profitability, and if you look at the way their numbers have been presented in recent years, you must understand that the way oil and gas companies report their liabilities, the way they report the value of their assets, is not the way all the other industries do. There are peculiarities to the oil and gas industry. That means that on an annual basis, you need to mark your reserves to market, for example. And because of IFRS constraints, once you've marked down the value of an asset, you're not allowed to revalue it even when the market has recovered. So that's where the bigger issues are when it comes to an accounting profit, in the sense that if our prices go to $80, I'm not allowed to revalue my asset. But if they come down to $60, I must take a hit. So that in itself underlines what we call the choppy nature of their profitability. Now, if you compared Oando to a Seplat, which is a more stable company, hasn't had any major shareholder issues, is generally cash rich, you would see that if Oando was able to fix its equity problems, and underline the fact that its reserves are actually significantly higher than Seplat's, then the trajectory has to be positive, and which is why if you looked at it dispassionately, the shareholders backing management to go to the market and raise equity shows that there is some level of comfort that the shareholders have that the company is on the right trajectory. Of course, there are difficult terrains to navigate currently, including refinancing its reserve-based lending and extending the tenure and repayment of its debt. I think that is what we should be looking out for over the next 6 months, to say how does the company progress with ensuring that it terms out its debt. So you say the bigger problem isn't the debt. The problem is that the debt is classified as current debt. Now, which is what other players in the market are not dealing with. Those guys have debt, but it's longer term debt that they have. And on their balance sheet, you see it as long-term debt. But
let me come in here, Mr.
A significant portion of his debt is short-term. That is where the problem
let me come in here. Doesn't that speak to its management of, its debt? When you talk about the fact, why did it have to wait until this particular time where you have a lot to pay in the next 1 year? And you talked about how others are able to spread their debt. That speaks to management, isn't it? Doesn't it?
Well, it does speak to management, but I think you need to put every company in their own peculiar situation. So I talked about Seplat. Seplat has always been cash rich, able to attract cash from the offshore market. Because of Oando's shareholder issues in the late 2000s, late 2010, 2020s, it couldn't go to the international debt market. It could only get funding from the banks, and bank funding relative to a more stable debt funding, maybe, bonds, Euro bonds and all of that, obviously means that the opportunities are different. Now, the company has come to the point where it's done its last acquisition. There is now a good trajectory ahead of it, but it needs to clean up its books. And the only way to clean up those books is to actually go back to the shareholders who haven't, provided any cash to the company in 10 years, to say, look, let's refinance our debt. Let's bring in some equity into the company. Let's stabilize, and then the company can start to grow and pay dividends to its shareholders. I think that if you listen to that strategy, it's the most logical thing to do at this moment. And I think shareholders backing the management shows some element of trust, in the sense that the story being told by the company, which is that, look, we've gone out on a limb, we've borrowed to make these acquisitions. These acquisitions are going to make our business even more sustainable in the long term. Come and back us by reducing our borrowing costs. I think it's logical that the shareholders have backed them.
Well, you say that, but of course, I'm watching the market, the equities market, and I see the seesaw movement of this particular stock. That's on the one hand. But let me also ask you this. With this background, I mean, the fact that growing up, I've always known Oando has issues with, corporate governance. That's what I've always known about it. And, looking at that background and some of the things you've talked about with the issues it's had with shareholders, do you think investors will want to jump on this potential 15 equity per share issue, which is a discount, to its price on the Nigerian exchange? Are you confident that, investors are going to jump on it?
That if the shareholders, the ones who voted at their AGM, can hear the story from management, look at the trajectory of the business that they've invested in thus far, don't forget that as much as you say that the price has been choppy, last year, Oando was a 5 Naira stock. So the shareholders who've seen a 10x improvement in their valuation at some point was actually trading at almost 90 Naira, would have seen that there's value in this company. And this is not the time for them not to back their management, who have helped them see that recovery from a 5 Naira stock to where it is today at 50 Naira. And I think that's where a dispassionate investor is going to look at it, on the premise of the numbers. What do the numbers say? The numbers say that this is a company that has significant assets that can be unlocked. It needs to refinance its debt. It needs an injection of equity. If the shareholders believe that the trajectory is positive, then they will back the company. And that's what they've done at the AGM. And the market is going to now test whether the shareholders would also be willing to back them in a capital raise. But I think that if you just looked at it on a holistic point of view, this is a company that has gone through very difficult times. And the trajectory from a shareholder perspective is upwards. And I think that's what you've seen happen at the AGM. Now, the jury is out until they come to the market and launch. We would not know exactly whether the market is really going to back them on the equity market, but the shareholders have backed them, and I think that's a good starting point for them.
Well, when you talk about what happened to Oando last year, I mean, you might want to say that's also acquisition backed. Maybe you see an acquisition happen and then you just want to take position because you think that, by some form of fundamental or technical analysis, that should be good for the company. But maybe people are disappointed because right now, year to date, Oando is negative in the market. But away from that, what risks could investors face if the capital raise is undersubscribed? I'm pressed for time. Maybe I will just put two things together here. That's one. And then, looking at the fact that Oando needs to settle with creditors within the next year, and that, of course, includes trade and other payables of 2.6 trillion naira and bank borrowings totaling 1.1 trillion naira. Do you think it will be able to achieve this within that period?
So that's the timeline that management have set for themselves. I believe that the shareholders are going to hold the board and management accountable to ensure that they're able to deliver on what they've promised. Now, that's what the market does. And Perpetua, that's very important. The market makes its decisions based on information that is available to it. And if in 12 months' time, we're looking at Oando and it hasn't achieved the things that it set out to achieve, then the stock market is going to pay it accordingly. And shareholders will need to make a decision. So I would say that, look, from where we sit, we're looking at the company closely. We've heard what management have said. We've heard the approval from shareholders. And what we're looking for is to see that management is able to deliver on what it has promised. If it does, the shareholders are going to be happy. If it doesn't, the shareholders won't be. And that will reflect on its share price.
All right. So what do you make of its plan to hold capital restructuring talks with major stakeholders and convert, $300 million of its RBL facility debt into equity? And, what are the implications of this strategy for its debt profile and future financial flexibility?
I mean, it's positive, right? So if you're able to convert some of your debt into equity, it means you don't have to service that debt, right? So the interest payments that you're making, the principal repayments that you're making, you don't have to make them. But I mean, the point is, the question would be at what valuation are those debt to equity conversions done? And I think that's where we are also going to be putting some level of interest in to say, what do the people who have lent money to Oando today, who are willing to convert to equity, where do they see the company valued at? If they see the company valued at the current market price, then that's positive to some extent. But if they see the company lower, then of course that's a conversation that investors would like to see. So I think that's what we'll be looking out for, to see the price of conversion for these debt to equity transactions. Now, if you look at what they've done in the past when they've done this, they've usually traded at higher than the stock price. They've usually converted at higher than the stock price. So if they're able to achieve that now, then I would say that, look, that's positive for the company. They will be doing two things: reflecting their equity at a higher value and reducing their debt. And that can only be positive for a company who's struggling under the weight of its debt overhang.
Right. So in less than 30 seconds, what's your outlook for all of this? Where do you see your angle?
Cautiously optimistic. That's the word I would use. Cautiously optimistic. I think the devil is in the detail. As much more detail that becomes available to the market, then we will start to form a firm view as to where we see the company probably in the next 12 to 24 months. But we're waiting out for management to come up with a plan that is submitted to the SEC. And then we can say, look, let's look at it on the merits of itself and make a call on it.
All right, that's interesting. I was going to ask you a question, but I think I know where you stand already, so there is no point. Femi Oladehin, Principal Partner, Argentil Capital Partners, thank you for your time on the show today.